Hey guys, 96 degrees here at the beach in Pacific Palisades, California today, so you know where I was right after the war room, right after that first hour trading pit this morning. Had to get outside, enjoy the weather, and just enjoy some time away from the computer. I hope all of you are finding a way to find some balance in this very crazy time. Right, this lockdown is getting on everybody's nerves, I can tell, and I am certainly not an exception to that. But in the war room this morning, we had two really good trading opportunities that fell in the category of discretionary trading. So not much happening in terms of the planned trades. We had a gap. Things moved sort of beyond where we thought they were going to open, but we had some really good trades, and I want to start by talking about Apple. So, an apple a day still continues to be sort of the rule of thumb around here. I'm going to find some way to trade into this thing. And today was a sort of notable day because it was iPhone Day, a new announcement coming out. Now, if you've been following the media, then, and I don't mean the television news media, I mean if you've been reading up on these things, read some of the geek things, the CNETs of the world and the PC magazines and even articles in things like the Wall Street Journal and the Financial Times. We're talking about this new product coming out, and it sure sounded to me like it was not going to be a very exciting product. The only thing that the new phone offered was access to some accelerated 5G services that aren't even available in much of the world right now. And that pointed to a new product that was going to have a little bit more fizzle than sizzle. And as you know, over the past year, Apple's numbers with the iPhone have been relatively disappointing. That's primarily due to COVID. Upgrade cycle on these phones now tends to be more in the 4-year range, and all the indications are that it'll be iPhone 13 in 2021 that's really going to be the product that's sort of going to change the face of this whole thing, change the way that the product delivers some of its content, change the ability, the technical capability that the iPhone has, and that this is sort of a minor upgrade on the 11. And quite frankly, I'm still on my 10, and I don't think that I'm going to be upgrading to the 12 myself. And it used to be the case that on iPhone Day, when that thing was released, we were down at the Apple Store waiting in line for the store to open. There's just not that kind of excitement anymore. So people who thought that the stock was going to have a lot of strength based on the pending product announcement, I think we're in for a disappointment this morning. But let's take a look at what happened, and I'll show you how it played out and why I made the calls that I did in the first hour trading pit this morning. Now, I know that between the time that I left the desk to go get some coffee and the time that I came back to the desk and was talking to you folks in the room, some of you made the decision you were going to go long Apple on the open. And you were asking me what was it that was the rationale for my decision to go short. So I think you guys need to bear in mind always the direction of the trade and the direction of the pre-market trading. So take a look here in the pre-market this morning. Apple 127.29 the high, and it made a very steady decline down to 125.40 before the market opened. This was a good indication that we were probably going to get that whipsaw reaction move lower. So when I said I was looking for a pullback, the one that I was looking for in particular was of this last move that the stock made prior to the opening bell, came down, got down to that 125.05 level from 125.91, and that gave us indication that we were probably going to see a retracement up into the range that was going to give us a big pop down into the opening 5 minutes of trading or so. Then, if you were looking at this fib study, really the ideal place would have been 125.58 to get short. But as I was telling the folks in the room this morning, I did pull that line down as we were getting closer to the open and focused on this 125.40 area. And the reason for that shift in focus was that we had this pullback that had this support and resistance here. And it was just really kind of, you had to be quick, and it's kind of dumb luck that you're able to get down on top of it that quickly around the open. But if you have the order out and you're able to just pull the line and modify the trade in Realtick, you're set, you're good to go. If you have to fumble around with a mouse and cancel orders and replace orders and everything, you're just not going to catch that opening trade. So don't worry about it. That's not the point of the trade. The point of this thing was know where the opportunity is. If you get it, you get it. If you miss it, you look for the next opportunity. Next opportunity came in the form of a short sale, as far as I was concerned. We changed the color of these lines here so we can differentiate the market from the pre-market. And as Apple came in and started settling in and putting in this support and resistance area here at 122.57, you guys know that in the first hour trading pit I called a 122.95 entry, and then we were going to look for a stop up above the high of this bar here at 123.27. That was exactly, I think, the number that I gave you in the room. And that was just putting all these little pieces of the puzzle together in terms of where I expected things to go. So we did get, obviously, that move down to 122.57. I think, Bibbs was waiting for that exact move down to 122.57 and nailed it, so congratulations there. But then over the course of the morning, the next thing that I told you to be on the lookout for was whether or not we, in fact, had a trend change in place. So even a short-term trend, when it reverses, is going to be tradable. So taking this big first bar out of the equation, we then had this move from here to here that gave us the opportunity for an entry on the long side of the market when the stock came down and got close to that pivot line. 123.05 or so was the entry, I believe, that we used, and 123.92 was the exit. And once again, we had a few people who managed to nail it, get exactly to that exit. They were patient. They didn't try to jockey price around, wait for it to come to you. It's not always the case that once you have a profit in hand, you should be closing the thing out. As a matter of fact, it's rarely the case. Put together your plan the trade, trade the plan, and then afterwards you can evaluate what was going on. So all of this should be very, very familiar for everybody who has been through the Volatility Band Mastery course. I think most of you took that, so this should be very second nature to you. If it's not, go back and review some of those modules. You got 20 hours of stuff there. I know it was a lot, but they're clearly labeled so you can go and dig back through them and find examples of this kind of trading and focus on these mechanics and these technical levels and how you can identify them and how you can trade through them. So then over the course of the rest of the morning, of course, we had lots of opportunities pop up on this one. I was gone at the 8 o'clock mark in California, so I was out and doing something else because I needed a little break from this stuff. But for the rest of you, if you were watching this over the course of the day, lots and lots of good trading opportunities as Apple moved into several trend directional moves and gave us lots of places to put technical entries and get in front of some really good opportunities. Now let's shift focus and have a look at our opening gap scanner and see what that came up with this morning. This week marks the beginning of earnings season, and earnings season is always going to be a very fertile time to use the opening gap scanner to look for those Baltimore chop setups. I know that most, if not all of you, have been through the 2SD Opening Gap Mastery course. It might be a good time to go back and review some of the principles there because they are really going to come into play over the next few days. Now this week we've got a lot of banks reporting. I don't necessarily like trading the banks. That's not my favorite trade. They behave a little bit differently than some of the other stocks, but when something on consumer discretionary comes across, I perk right up. And what was in the news last night, if you read the Financial Times, then you saw quite a bit of discussion of Disney and what's going on with Disney, especially worldwide with the amusement parks are in really not great shape. Obviously, there is no time for the California Disneyland here to open, much to my son's dismay, right? Much to everybody's dismay. And they've let a lot of people go. And Disney is a company that was very, very loyal to its employees. And the fact that tens of thousands of employees are being released from their jobs is not a good indication of where Disney expects things to go. So that said to me that if it did gap on earnings this morning, that we would very likely have the potential for a reversal. The gap was very likely to be on the upside because revenues are going to be stable because of things like curtailed redundancies in human resources and all that, otherwise known as firing people. But let's have a look at the scanner first off and see what the indication there was for the morning, and then take a look at the actual gap play that we had in the room. All right, here she is. This is your 2SD opening gap scanner, and if you don't have this, you can let us know, and you can try it out for a week and just play along and see what you think of it. I think most people are using this. It's really good at segregating the data for us. So if you look at the way this is laid out, this of course is a third-party piece of software. It was created by one of our mastermind students, and he runs it, and it's on a server on its own, and it's very, very efficient. It's pulling data in a way that we can't do locally. It separates the S&P 500 from the S&P 400 gaps, and it also categorizes them as to whether or not they're earnings. They're marked with an asterisk if they're earnings, and whether or not they are in the news. This morning we saw the pop in Disney, and then we look at the data here and note that it's not an earnings play, but that it is on the heels of some news that was not great, as I said. So it indicates a different thing to me than it indicated to the market right around the opening bell. Stock was gapped higher, and we see here that it was flagged as a potential short. When you see them highlighted in yellow, of course, that means that those are the stocks that I'm interested in. FAST, that one did wind up triggering and going to a target, but the target was not wide enough for us to be interested in the trade, because by the time the first bar ended, the potential for profitability was only about 12 or 15 cents on that one. But Disney had me interested from before the opening bell right up through the gap, and let me show you what the chart of Disney looked like. Here is our open. So when you see something like this, immediately when you see a first bar that closes up in the high of the range like that, and then a second bar that just starts to bury it, you need to go and immediately start thinking about a trapdoor setup, because a big double header setup like that on a second bar on a stock like Disney doesn't happen that often. So double header kings and queens, right, depends on which version of Around the Horn you read. If you read Around the Horn, a trader's guide that consistently scoring in the markets, you know it as a double header, and if you read Beat the Street, then I called it a kings and queens in the worldwide release of the book. But nevertheless, that is a clue, and anytime that you see trades setting up in one of those daily patterns on an intraday chart, that should tell you it's time to key in on the possibility that you're going to have a major move rather than something short-lived. So on this one, what you wanted to do, and what I did in the room, when I gave you guys what were going to be my entry lines and my targets, this is what I was referring to. So on a trapdoor, of course, we're looking for a fib expansion. We are looking for the 138.2, 150, and 161.8% expansion on these. 128.65 was the level that we were targeting, and that was on a 129.39 entry. So we had a nice move right in the second and third bar of trading, got us right down to the profit target, and as a matter of fact plowed right through the profit target for a nice little extension. We had it bracketed up, so it exited at the planned exit price, and the stop on this one was based on this third bar. So 129.70 was going to be sort of the drop dead price if it went back up against us. That is looking at a couple of things here. It was looking at this price activity sort of unwinding, and at the time, if you looked at the volume by price over here, we had a good indication that if it broke above this line, it was going to shoot back up into this range. Didn't want to be a part of that, but in terms of trade management, this is pretty much textbook, and if you want to go back and review it, go to that 2SD opening gap course, take a look at the module on flip tops, take a look at the module on trapdoors, make sure you're familiar with how to set those trades up first thing in the morning. Alright guys, I hope you had a great trading day today and an even better one on deck for tomorrow. I'm looking forward to seeing you all in the first hour trading pit first thing in the morning.